The case for a chat over here that there are lots of new project announcements which have fallen, and Q1, a seasonally weak quarter, has not really worked out in terms of capex requirements. Mahesh Vyas, who's MD and CEO of CMIE, joins in to talk more about the sector as a whole. Mahesh, great to have you on the show. Q1 is seasonally a weak quarter. What does data suggest at the end of Q1 in terms of capex revival and the trends thereof?
Well, there is no revival in the capex story in the first quarter of 2018-19. The numbers that we see show a slowing down, a continuation of the slowing down of new investment proposals, and we also see a slowing down of completion of projects. So there is no revival. In fact, there is a further slowing down from the trend that we have been seeing over the last several years. In fact, there is almost a systematic fall from 2011-12, except for a brief revival in 2015-16. But for the rest, it's been downhill all the way. Yeah.
A lot of fund managers we speak to say the current environment is one of the best in the last few years. From an investment standpoint, earnings are to pick up. Do you agree with that? Where is the truth?
Well, I think on the earnings front, there is a lot of expectation, and the expectations have been high for several years now. But that isn't turning out to be true. There has been some increase in the profits of companies in the past 1 year or so, but we still have a long way to go. What matters is whether there is investment happening sufficiently in the country to be able to sustain the growth that we have been seeing over the past few years. We require to accelerate from where we are, and the truth is that earnings growth is below expectations, number one. Number two, investments are not strong enough, and therefore jobs are not good enough, and therefore demand will remain weak. So I think the story isn't as rosy as many analysts could be painting it.
Is the government, though, taking enough measures and initiatives to revive the capex or capacity utilization plans, given that the decline is mainly because of the fall in new public sector projects?
I think it is the current situation on investments is not something that can be blamed on any institution. I don't think the government needs to take the blame for investments being slow. They could take credit if they pulled it up through some actions, but those are very complicated or even more controversial. But what I want to say is that it's not about blaming any institution for the investments being the way they are. It's a business cycle. Industrialists are not going to invest if capacity utilization is already very low. So if you have max 74% capacity utilization, investors are not going to invest. They have enough slack capacity. The biggest growth of investment over the last several years, nearly 10 years, has been the power sector. But we are almost seeing surpluses on the power sector right now. Plant load factor for thermal plants is of the order of about 65% or so. At this point, nobody will invest into new thermal power plants, which is the largest source of investment. We have replaced that partly with the increase in road transportation, and the government has taken big initiatives in this, and there's been big progress because of that. So, but an investment into road will necessarily be much lower in value terms than in the power sector. So I think this is cyclical. I think this is business cycles. This is not about blaming the government or anybody else. This is about appreciating that demand needs to pick up before investments can pick up.
Any signs of improvement in the coming months, given that you're saying that this is just cyclical in nature?
Sorry, I didn't get your first part of the question.
No, I just wanted to know that, do you see any signs of an improvement in the coming months, or do you think it's going to be a very long haul wait for these stalled projects to be up and running once again?
The stalled projects are not a problem now. The problem is more about getting new investments. I don't think that this is going to be a long haul, many years of slow growth. I think nevertheless 2018-19 is going to be a difficult year. We already have this huge capacity overhang, and it will take some time for that to be absorbed. But add to that the fact that 2018-19 did not begin very well. We have index of industrial production still remaining weak. We have low food inflation indicating low consumer demand. We have low, or rather 10% fall in Kharif sowing so far, and a slightly erratic monsoon. Not a very good way to begin a new year, and the year as we go ahead will become more difficult as elections are around the corner, and I don't think investors are going to take their call on long-term investments in this situation.
Right, yeah, that seems to be the case. What about new project flows? Has that picked up at all? Or you think as of now that sort of outlay is also not defined, as in people are not really going out there and looking at expansion plans just as yet?
There is only one sector where there is big increase in new investments, and that is the purchase of new aircraft. So almost every big airline is purchasing aircraft in a big way, and that makes sense because we see airlines mostly running full. So there is a bigger demand for travel by air, and airlines are showing that. Now proposals to buy aircraft are not small, they're extremely big, and a large part of the new investments we are seeing in the last few years is aircraft purchase. So barring aircraft purchase, which actually is not an employment generating Capex building, we see no increase in new investment proposals. In fact, we see a steep fall in that, and that's a bit worrisome, or rather I should say we should wait for a little longer, and maybe in 1920 or 2021 we will see a revival as demand picks up.
Mahesh, we leave it at that. Thanks very much for joining us and giving us that update.